How are you now? It's James Whelan here, and you're listening to the Theory of Thing Investment Podcast. As mentioned, I am your host for this journey, James Whelan of Small Caps and Investor Pulse and Invest House. And I'm joined by my usual co-host, Heath Moss of HLM Investments. Heath, with a very formal introduction, happy RIU week, and I hope that you had a good one. It's Friday, the 8th of May, 2026. And I'm having a work from home day because it's been a big week, mate.
Hey, good morning. It sounds like you've been really busy. The RIU week is a big one for the small caps, and the good thing is they put out all the presentations to the market, so you get a really good summary of what they're about and what they're doing, and updated cash positions, which I find the most important and stuff like that. So yeah, it's a lot to go through. Because how many companies presented? It would have been huge, wouldn't it? 60 more?
I know there's 100. There's 100 exhibitors.
100. Wow.
So I think you probably would see about 75 presentations. They don't all present. So it's an extraordinary thing, but there's so much to be said. One of the last interviews I did was with Kerry Stevenson from the Gold events. She's the Gold lady, everyone knows. She's incredible. She's such a good soul. It's just a good head on her. And she was talking about how it's just the luxury that we have of being able to be right up close to a company and actually being able to eyeball and ask questions and being able to get the intonations of what it is that they're doing is a huge difference for investors. And if you don't take it up, if you don't utilize that luxury, then you're doing yourself a disservice. So I would recommend that anyone get out to the next one and have a real kick of the tires of the companies that you see out there.
And it is really unique for the resources small cap sector that you get this sort of exposure. I think biopharma do similar, but yeah, to get this, to talk directly to a CEO or whoever's in charge of one of these little companies is invaluable as a shareholder or a potential shareholder.
Yep.
Yeah.
Yeah, no doubt. And look, it's so it was a big 3 days. We got a lot done with small caps. We've now sort of more or less launched the research portal that we've got. So we're really stoked about that. Had a big lunch yesterday with all of our IR partners. So all the investor relations people, that's where a fair chunk of our ideas and business does come from. And so we took them out to a big long lunch. Thank you very much to Matthew, who we've had on the show a few times, and the Charles for putting us on. That was a hell of a thing that we did. And it was a chance to actually show not only do we have long form research that's updated every day whenever a company updates the market, but we've also got this short form research that comes on the back of it now. So a 5-pager that really just summarizes what it is that you actually need to know with the company. It's incredible. And it's all AI generated, but just it's a beautiful piece of the thing that we've built. Companies are loving it, investors are loving it, and our IR partners are loving it too, which is great. So
Fantastic.
I am spent 3 days talking about these things, absolutely just exhausted. So, and it's good to be busy. It's good to have a thing to talk about, right? So, as opposed to just wandering around going, "Hey, what do you do?" We actually have our research says this about this. Have a look at this and see what we've done. And yeah, for the most part, companies, yep, that's bang on in line with what it is that we're trying to say. And yeah, you've picked it up beautifully.
Fantastic. Yeah, I love the small cap space. It was where a lot of my career started. I've always been, stockbroker, moving to a portfolio manager, etc. But we did quite a bit of raising for quite a few small IPOs, etc. in the day. It's just phenomenal, hearing the stories about it, learning about different geographies and rock formations and all that sort of gear. It was fantastic. Obviously, I've moved on to more portfolio management now, but it's still a passion, and I still trade them myself, and have a select few clients myself that get into the specky small cap end as well. So it's quite exciting, especially if you get on a runner. It's a bit like picking the Melbourne Cup horse to win. You get on one of them, you ride them down the straight. It's the same sort of feeling with a small cap when it starts running. Yeah, awesome stuff.
Yeah, no, it is. Some of the takeaways, let's actually talk about some companies here.
Mm-hmm.
I love talking to Andrea Marsland-Smith, running that South Australian uranium play, Alligator Energy. They did have some announcements recently. They achieved 70% uranium recovery in field trials at their Samphire project out there.
Mm-hmm.
70 PV exchanges confirmed Samphire ISR viability. And then the next is the second well is going to test lower grade margins. I'm just reading off the note that we wrote about them here, and that was good. She said there's something about flow rates. Do you understand any of this stuff? It's a bit beyond me.
Are they doing acid leaching, or are they doing similar to our old mate's Cap over in Kazakhstan, where they inject the earth with a heap of sulfuric acid
And then
and
it comes.
then
They do that.
pump
That
it
one.
up?
That one.
Yeah, that one. Okay, yeah. Well, yeah, that's why they'd be talking about flow rates and stuff like that,
Yep.
which
So
is tough gig at the moment given the shortage of sulfuric acid. But obviously, this mine's still a few years away.
annoying. Yeah. Okay. That explains a lot on that one. Yeah, they do. And I actually didn't ask her because we'd run out of time because we try and keep the interviews short. But I really should have asked her about the sulfuric acid and what she's doing around that.
Yeah. Yeah, I mean, it won't be a problem in probably 2 years because Kazakhstan are actually building their own sulfuric acid factories, plants, and it will free up. It's mainly because China have halted exports of sulfuric acid. So, yeah, I guess that clears up within 18 months to 2 years. But, yeah, it's certainly an interesting way they bring up the uranium, and it's, you just pump the earth full of this sulfuric acid and it sort of breaks it all up and brings this radioactive sludge up. Yeah, and they do similar in, I think they do similar in Canada as well for Cameco's uranium deposits, but they've got to worry about ice and all that sort of stuff as well. So it's a little bit more complicated as well. None of this is easy stuff. Uranium mining is probably one of the hardest going around, apart from rare earths and stuff. I think uranium mining is really the toughest gig out there, probably.
Yes. No, yeah, no doubt. But she's a very competent leader, and really happy with what it is that they're doing there. But yes, it is tough. It is hard, but I think they've overcome a lot of the challenges that they've got, and they've got a lot of good stuff out there, which is great.
Yeah.
Yeah, so keep an eye on Alligator, or continue to do so if you already are. Someone gave me a tip about Brazilian critical minerals that they presented well. I didn't get to see that. There's some other good ones that are in here that I can pull up. Hang on, here we go. Let's check out the latest. Checking out the latest news for the top stocks. What's running? STV, Swift TV. There it is. Close the loop. Artemis Resources, and coming off MTL, FBR, JLL. Okay. Anyway, so I'll pull something up. Now, mate, do you have a market wrap with you, with Heath?
No worries, mate. I can do that. Give me 2 seconds. I'll share my screen. Why is that? Screen. And where are we? Window. There we go. All right. Can you see that? Beautiful. Excellent. As per usual, we have the S&P 500 up on our screen to start with. And you can see that dip there, or that V-shaped recovery. That's obviously because of the Iran war and the recovery out of that from about mid to late March into a rip-roaring market as we see now. It was down a little bit last night. What are we down? 0.4%, so nothing really. But it is in breakout mode. And most of this is on the back of earnings. Earnings season has been spectacular, especially the Mag 7. I heard a really good stat the other day. Forward year forecast earnings estimates from analysts have risen at 25%, which is the highest rise over a 1 year forward estimate period since, I think, the 2002 crash and recovery. So analysts have lifted their forecast earnings by 25% over the last year for full 1 year forward estimates, which is an extremely bullish narrative. Yeah, the Bank 7 especially are leaning into that, obviously, with, we're starting to see those return on investment from AI. Their AI plays, we've seen Anthropic running at 30 billion RR. And I think, OpenAI is around the 20 to 25 billion at the moment. And I think Amazon said even their little AI division, which is really hasn't been going for long, is running at around 15 billion a year. So, they're all starting to show really strong growth in AI divisions, and they're starting to bear fruit. Now, the rest of the market isn't as bad as you think. You think this is all just tech. No. If you remove the tech, because at the moment, as where we stand from, I think it was last weekend, earnings are at 27% growth in the first quarter this year, which is phenomenal, and no doubt will come down as more companies report, and we'll get another updated stat come Sunday or Monday our time. But the other 493 companies still running at 12.5% earnings, which is extremely strong. So even outside of the US tech, there's still really strong earnings growth. And it's looking good. I mean, the US economy at the moment, they're not really showing any signs of impact from the Iran war. Obviously, gasoline prices are up and have risen at the fastest rate, almost on record. But, the ISM surveys that have come through have shown very solid growth. ADP employment numbers that came out last night, or the night before, were really, really solid. And we got non-farm payrolls out tonight as well. So, and CPI is still intact, although we really haven't got the figures yet that will encapsulate all of the Iran war, which will come through in the next month's numbers. We've only had a partial read so far. So things are still looking really, really strong in the US overall. And we have, like I said, the market, what are we at? 7,300? Yeah, 7,337. So, yeah, it's been phenomenal. If we look at the other side of things, oops, sorry, that's the Russell. I'll go to the NASDAQ again, almost vertical. You'd have to think there'd be some sort of pullback in the short term on the S&P 500 and NASDAQ, just maybe back to this 7,000, 7,100 range here, simply because it's just been so strong. And the earnings that will come through now, you get more discretionary retail and stuff like that. So that will drag earnings back a little bit. NASDAQ, again, like I said, be very strong. What do you call it? The 10-year, where is the 10-year yield? Still trading in that range between, say, 425 and 445. A lot of that obviously on expectations of higher prices because of higher oil, but also because this US economy is showing resilience and strength. There's less likely to be cuts now this year, even though if you listen to Walsh, he's been traditionally he's been more of a hawk than a dove in his past. But he's more dovish moving forward because of AI and AI productivity. He thinks CPI will collapse over the next 2 to 3 years, and there will be cutting as a consequence. But in the short term, he has recognized that, there could be elevated CPI because of the war, etc. But overall, I would say with someone like Walsh in charge, we're going to see lower rates and lower yields moving forward. What else can we look at? Gold. Gold sort of muddled through there a little bit. Almost broke out the other night and almost broke down a few weeks ago. But the gold story is, if yields and US dollar come down, then gold will break out and see a pretty good upside. At the moment, is sort of, it could go either way at this stage. If the war continues to muddle along and yields stay high and the US dollar still stays, where it is, then we could see it fall a little bit more. But if they get a resolution, because we know they're chatting at the moment, or they're not chatting, or it's on and off, I think we could see the US dollar drop, yields drop, and gold break out. And then we'll quickly move on to oil, because obviously that's the flavor of the week, month, and everything. Look, it's sort of trading in a range between 100 and 120 really at the moment. It's, WTI, it's at 96. The US is exporting 6.4 million barrels of oil a day now, which is up about 2 million since the start of the war. So they really have ramped up. I was listening to a podcast the other day with a guy that he's more into tech now, but he started his career in energy and oil and is well known for it. He was saying that he believes where people have got things wrong is there's about 5 to 6 million barrels of oil per day managed demand destruction globally. So that's things like people working from home, taking the bus. Albo is really happy. less people taking flights, etc., etc. But it's all managed. It's being done on purpose, sort of similar to how we did with COVID
Yeah.
to start with. But he believes that's why oil isn't at $150 a barrel now, because when this all started, he believed that's where it was going as well. And then, of course, you've had increased production in the US and exports in the US, and a lot of oil is escaping via the Red Sea now too. Saudi Arabia is pumping out 7.5 million barrels a day. UAE's almost at 2 million. Iraq's at 500,000. So that does make up for a lot of the oil that has been misplaced. But yeah, of course, the sooner we get this resolved, the better for lower oil prices, which is better for global growth, obviously. I think that's mainly it. I mean, we look at copper. Copper's been holding up really well through all this. I mean, some of it is because of lack of, because of the Hormuz Strait being blocked and some suppliers unable to get out. But apart from that, it's still the same story of the demand, the AI story, the electrification. If you want to look at demand, you only have to look at the Australian trade numbers from yesterday. We ran our first trade deficit in, I think it was almost a decade yesterday for the month, simply on the back of oil and fuel and lubricants imports, but also AI and data center capital investment and all that sort of importing all the stuff we need for AI data centers coming through as well. There's been a big ramp up in the last month in Australia on the back of AI investment as well. So that's why we ran our deficit last month, and that was unexpected. It was very unexpected. It wasn't full. You can see where the growth is starting to spill out of not just the US, spilling out to the rest of the world as well. So copper's looking really good here, and you and I have said numerous times how much we like copper here. So
no problem with copper, especially on the back of what it was that I've just seen over the last week as well.
Yeah, exactly.
On oil, I just had something come up. I'm just going through some stuff that I bookmarked over the week, and Jeff Curry, where's he from? Carlisle, but he's ex Goldman Sachs head of commodities analysis, more or less. That's a very basic way of dumbing down his job. Quote, I've never seen anything like, he was on Bloomberg the other day. Quote, I've never seen anything like it before. Oil storage tanks in the United States will run empty somewhere in the July 4th period, according to Jeff.
Yeah.
Jeff? Yeah.
That's a problem.
I agree. I'm going against you on the fallout. I think the fallout is bigger than what people are saying that it is. And I think that we're downplaying how big the ramifications are that have been done. That you can't unwind this.
Yeah, I think obviously the longer it goes on, the worse the ramifications are. And obviously there's certain points where the US can't draw down on their inventories anymore. But at the moment, there is plenty of oil going around. The premier on Brent at the moment is less than $2. So at the moment, if you look at Brent prices, they're $102 a barrel. This is for I think it's for 90 days delivery. This is the front end contract. If you order this, is for 90 days delivery. To get an barrel of oil today is only $2 more. So that's telling you that there's plenty of oil around at the moment. That did blow out. That premier did blow out to about $40 or $50, and it did cost you about $150 to $160 a barrel to get it immediate delivery. But that has come crashing down, and that's because of these diversions, the demand destruction, production, etc., etc. Now, like you said, it can't carry on forever, and moving forward. Like I said, we will not come back down to $60 to $65 barrel of oil anytime soon.
Yeah.
But I believe the destruction isn't anywhere near catastrophic yet. We're going to be fine as long as they wrap this up within the next month or two.
Fair enough.
Yeah.
I'm no doubt that we're going to be fine. It's just that some of these things is going to be, with sulfuric acid. I mean, the fact is that we don't need China. You don't need China suspending exports when, I mean, they saw the writing on the wall with exactly how precious this stuff is going to be.
Exactly, yeah. Yeah, and they cut their exports almost immediately as soon as this thing started. But
Yep.
they're under a lot of pressure too. I mean, I think this is why I think Trump's going to wait till after he meets with Xi to clear up the strait. Is I think 20 to 30% of China's exports travel through the strait into this to the Middle East.
Okay.
So their economy is suffering as well on the back of this, and not to mention, 30% of their oil imports come from this area as well. So they're feeling it, and I dare say he'll come to some agreement with China. China will lean on Iran. There will be BFFs, and actually, what I can see actually happening, and this is, I've got no sort of experience in war, etc., is they'll come to an agreement and say, okay, we're going to have our peace talks over the next 30 to 60 days. During that time, Hamas is open and no one will be firing upon anyone as long as we all come together and we're talking peace in good faith. Because I don't think the nuclear stuff can be wrapped up quickly.
Yeah, they'll put that to the side. I
Yeah.
think that's why this is working. Okay, moving on because we're going for time. I am absolutely shattered, mate. Nothing in the tank at all. I'm taking the dog because I'm looking after the dog as well. So I'm going to take the dog for might take the dog for a steak. She's earned it. I've earned
Fantastic.
it. Yep.
Sounds good.
Okay. So let me think. Football.
Football. Yeah, I don't have any bets this weekend. I think the Crows, after that win against Port in the showdown, I think we'll come together and smash whatever the line is against Richmond. We'll play Richmond at the MCG on Sunday.
Yeah,
I think we'll beat it. Yeah. So even though they beat West Coast over there, but I think that says more about West Coast than Richmond. Yeah, I think Crows at the line easily.
Yeah, I got no problem with that. What do we got here? Yeah, Roosters, Cowboys, Knights. For the NRL, it's pretty much straight across the board. Take the favourites. Storm versus Tigers is a dubious one. Storm has had a really rough run, and the Tigers are not terrible. But losing Luai next year, I think, seems to have demoralised them a little bit. So they got their butts handed to them on this one. But look, if you just take the favourites together, Roosters into Cowboys into Panthers, you're probably going to do pretty good with that. Bet responsibly, not with your head and over it, whatever the hell.
Mate, the Crows line is only 38 and a half points. Take that every day of the week. So
38 and a half.
Yep.
That's not so much.
No,
Hawthorn, how good were the Hawks coming back?
Freo last night, you mean?
Yeah, Freo. You love to see it happen, don't you?
Yeah.
I'd love Freo to have a crack at it this year.
Yeah, this certainly looks like they've got the team, their best team for maybe since the Pavlich days.
Yeah, that's true. Mason Cox isn't the impact player that I thought that he would have been on the move there, but I suppose he's just coming back into it. So
he's handy to have as a backup.
yeah, you wouldn't turn him down, would you? And the Swans are setting us all up for another grand final heartbreak once again.
Swans versus Freo.
I can see it coming.
Freo by 10 goals.
If the Swans are in the grand final, I won't watch. Tell me after how it's gone, and then I'll consider it. Just
fair enough.
But yeah, you can see that happening again. Swans versus Fremantle. Oh my God, the least watched grand final in AFL history would be Swans versus Freo.
Yeah, probably. Yeah,
guarantee it.
Yeah,
that's hilarious. Or maybe GWS. Swans versus GWS would be the least watched grand final in history.
Yep.
Okay, mate, that's all that I've got.
That's all I've got too.
All right, I'm going to get a bit of work done. I'm going to try and get a whole bunch of package stuff that we did over the week with RIU and get some of this research out. Go and check out the research portal. I'll chuck a link on to wherever it is that we do and pull up the companies that you know and love and see what the analysis says. Anything else, mate? Otherwise, I'm going to check out.
I'm all done. Go Crows.
Go Crows. All right, I'll talk to you later, mate. Have a good one. Stay safe out there.
See you later, guys. Bye.